Good evening, Marshall Reddick Real Estate members. This is Tanya Loremore, Real Estate Advisor. I'm so happy to have you all on the call this evening. This is a topic that is very sensitive, lots of financial art that goes along with it. I have Linda Robinson here on the line with me. She's the specialist that we've worked with for several years and has done over 200 transactions, I believe. Linda, you there? Hi.
I am. Hi, Tanya. Hi, everyone.
Fantastic. Just checking that we're all here on the line. So as you can see, the title of the presentation, Solutions to Help Avoid Foreclosures. There are many different options that Linda will be covering. I'm going to go on to the next slide now. This is me. I am a licensed real estate broker for residential real estate here. I hold my realtor status. Little bit about me. I've been a real estate advisor for about 3 years now with the company. Second generation. My father retired from the company, so I basically grew up coming to these events. I live, eat, breathe, sleep real estate. It's my passion, so I'm here to help with any questions you may have. I am also an investor. I grew up with my family, both sides, doing investments, so everything from property management to fixing, repairing, all good stuff. If you have any questions outside of this topic afterwards, more than welcome to reach out to me. I've been helping a lot of people, as you can see, sell their properties here in Southern California. I'm going to be sending out my next listing that I just took today. It should be a decent one. If you're interested, ask me. I'll be happy to share. So, and as you can see, I'm a numbers girl. The FRL business degree was a finance real estate law that I graduated with. So anything you guys want to know, please ask. More than happy to help. I'm going to go on to the next slide now. Making a business decision, right? We're all in real estate to make money, right? I mean, that's the bottom line. So this is a business decision when you enter into a real estate transaction, as well as things change in life. You know, everyone is in a different position. Perhaps you're getting ready to retire, which will equal a fixed income. Perhaps the current loss that you're taking on your property every single month may not be comfortable for you. Some of my clients that come to me when I go over the review of their properties have had a job loss. It's no longer sustainable, so it's cutting into their family's important funds for feeding. They don't want to fall behind on their primary, if it's especially a rental unit that is vacant or something. Hardships come up, medical bills. I mean, there's so many reasons for why people come into financial hardship and have to come to a decision. It's a business decision. So I'm going to go on to the next slide now. Options to consider. So this is kind of my area of expertise as a licensed realtor. People come to me and they ask me for a current market analysis, CMA for short. And people want to know, how much is my home worth? A lot of people go on Zillow. That's not necessarily the best analysis because it pulls from like a mile radius of not kind properties. So I would be able to provide you with a specific property analysis of your home. So on the left-hand side, let's see what the differences are here. So a short sale, say the current market value of the home after I do an analysis is $294,000, but you took a loan out pre-2008 because the value was a lot higher, and you owe $372,000. Now, if you wanted to sell that property, you couldn't because the amount that you could get for the home and what you owe on the home is $78,000 difference. So that's where Linda comes in and comes to the rescue, as that's a short sale. Then we have the other option, the pay out of pocket. I actually am working with a client right now that would prefer to pay out of pocket rather than the alternative because it was affordable to them. So same situation, a $9,000 difference only. But if you pay out of pocket when you do a conventional sale, we all know that there's commissions to be paid plus closing costs to a loan. So you're going to come out of pocket. It's less than $20,000 on a home price, as stated there, the $294,000. So it may be worth it to you to pay the $29,000, depending on your career, what it is that you need to salvage your FICO score for, your credit, for a better lack of terms. So I'm going to go on to the next option here. So making a decision-making analysis. Why do you need your credit? That's a great question. Think about it. Why do you need credit? So the only reason why people need credit is to buy things, right? To go to the bank or a lender and just ask for a loan on something that determines your interest rate, etc. If you don't plan on buying anything, it's costing you money. So how much is your credit costing you? That question's a great question that I go across all the time, and we really dive into it, which I do have a slide on, so I'll skip that for now. These are just questions for you to start thinking about. And how far underwater is your property? You can discover your market value. Just ask me to run a current market analysis for you. I'll help determine that. So next slide is, what is your plan of action? Do you need to buy more real estate? That's a huge question to determine before you move forward with a foreclosure or a short sale, what have you. Then next it would be, do you have favorable interest rates? If they're not favorable, let's go ahead and let you talk with Linda. Linda does loans. Got to refinance your property, get it into a locked fixed interest loan where it's going to be favorable and or even more affordable to you. And then next option before doing it is, do you need to buy something, kind of like what we were talking about before. So just go ahead and we'll go over all those questions. The very last point on this slide is anything you need credit for. Let's discuss your plan in full detail before we make any big decisions. Guys, I just wanted to point out to you this is an interactive webinar. So off to the right, you'll see places where you can type questions. Go ahead and type something, send me a smiley face just so I can see that you guys see where it is. There we go. Thank you, thank you. Oh my goodness, overwhelming. I love all the love. Thank you. Okay, so please go ahead and continue typing in all your questions there. Great, because now I'm going to be able to help take over and answer your questions. In addition, while Linda is going over her topic that we're here to learn so much about, it's always so informative. Again, she's done this for several years, and that's why we continue referring our clients to her, because she does such a great job. I'm going to let you take over from here, Linda. Thanks.
Thanks, Tanya. I always appreciate talking with the members, of which I am one. And so welcome everybody to the webinar. And just to let you know a little bit about me, I started with Marshall Reddick, I believe in 2004, and I decided that that was going to be my vehicle for retirement, was that I was going to buy real estate. And I loved the idea of buy and hold and collect rents and sell it when it appreciated enough, and buy more, or refinance and take out money and buy more. And the first couple of years was just beautiful. I mean, the first property that I bought was in Cape Coral, and new construction, and I bought it for like $126,000, a 4-bedroom with a lanai, brand new property. And 1 year later, 1 year later, it appraised for $268,000. And so that was double what I paid for it. And I said, this is fabulous. I mean, this is really going to work. And I was flying high. Maybe some of you can relate to these stories, but I was flying high. And so what I did was I refinanced it. I took out some money, and I bought 3 more. And the second property that I bought was in Lakeland. And that one was a slow bloomer. It took 2 years in order for it to double. I said, this is just incredible. Lakeland, Florida, Cape Coral, Florida. Florida was really booming. I was buying a lot there. And it took 2 years for it to double. I said, this is just fabulous. And so in my heyday, I had 14 investment properties. And by the time I had bought the 14th property, all of a sudden the market started tanking. And my properties started depreciating very fast. And not only that, I mean, I was kind of prepared for that, looking at it, but I wasn't prepared for the fact that the rental market was also going to go down, and that my renters, when I lost a renter, I couldn't get it rented for the same, in many areas, I couldn't get it rented for the same price point that it was renting for before. And so now my break-even properties or my slight cash flow properties ended up being negatives. And then in addition to that, whenever I lost a tenant, I ended up with high repair costs. That beautiful property in Cape Coral that I was talking about, we had well water, and all of a sudden they said that no, now they're going to build county sewers, and every owner had to pay like $18,000. Had to pay $18,000 in order to get the city water, which you had to get. And so it was just crazy. And that property at that point took a dive of about, well over 50%. I mean, it was worth, Cape Coral was one of the stronger hit areas. And so at that point, I decided that I really looked into short selling. And at this time, you know, I was already a realtor. I was a loan officer. I was doing mortgages in real estate. And I wasn't really an expert in short sales. But I'll tell you, I became an expert very fast, getting rid of 11 of my 14 properties. And it was one problem after another with these properties. Even my best one, that was up in Cheney, Washington, that was cash flowing every month to the tune of like $300, which wasn't a lot, but you know, it was a small outlay of cash for the property, and $300 a month like clockwork. All of a sudden I lost a tenant and could not find a new tenant. It went 10 months of me paying a mortgage payment and not being able to find a new tenant. And at that point, I said, you know, this is ridiculous. We got to sell this one too. So that's how I started becoming an expert in short sales. And then, you know, I just affiliated with Marshall Reddick Network and started doing short sales for all of the members. And you know what I found is that after doing, it's like I was really up every night. I'd wake my husband up in the middle of the night. I mean, maybe some of you can relate to this. You know, I'd wake my husband up in the middle of the night and cry. I mean, our finances. Then my husband, I didn't even tell you, my husband lost his job. So, you know, we were actually paying all these mortgages for a while. As a matter of fact, one year, I looked on our tax returns, it cost us $50,000 that year out of pocket to pay for our income-producing properties. I mean, I looked at my husband and I said, this is crazy. $50,000 to pay for our income-producing properties between repairs, vacancies, maintenance, taxes, everything else that went along with being a property owner in hard times. And at least at that point, my husband had his job, and we did it. Then he lost his job, and then it was just not possible. The next year, there was just no way I could come out of pocket with $50,000. And so that's when we started short selling all these properties. You know, one short sale that we did, which was in Lehigh Acres, I bought that property for $145,000, and I ended up short selling it, and the lender accepted $35,000. It went from $145,000 to the value being $35,000, and this was a brand new construction also. And we had a tenant in there that was paying $800 a month. So do you think that the person who bought it at $35,000 that they got one hell of a deal? With a tenant in there at $800 a month? Yeah. But me having to pay $1,400 a month for my mortgage was not a good deal. So anyway, I'm going to tell you, we'll go on and we'll talk about, the other thing is that I tried loan mods on most of these properties. And as a matter of fact, in Cape Coral, I'd gotten a loan mod for 3%, for a fixed 30-year 3%. That was fabulous for an investment property, 3% for 30 years, great. And then all of a sudden, they wanted $18,000 for the sewer system, and we lost the tenant. I mean, 3% is still too much when the property is not worth it, and you have to shell out $18,000 for a property that isn't worth it. So what I'm really referring to here is looking at these things as if it's a business decision, like Tanya was talking about, you know, really looking at it as if it's a business decision, because it is. So what we're talking about here is loss mitigation. It's really mitigating your loss. From the lender's point of view, they're looking to mitigate their loss. That's why you need to have somebody on your side who's looking to mitigate your loss. And so these are the loss mitigation options. Loan modification, that's a process where the terms of the mortgage are modified outside the original terms of the contract agreed to by the lender and the borrower. So you both, you know, agree that the terms are going to change. And we'll talk more about that because it's a very, very difficult process and a very narrow process. Very few people actually slide through on a loan modification, especially on one that's favorable enough that is workable for them. Then there's a short sale, and that's where you strike a deal with the lender to accept less than you owe on the property in exchange for avoiding foreclosure. Instead of walking away, you say, okay, you know, let's keep our credit somewhat good and do the right thing, and we sell the property, and then of course we have to get the lender to agree. Then there's a deed in lieu. And the deed in lieu is basically where the seller strikes a deal with the lender, or I strike a deal on your behalf, to accept the property back and thereby avoid foreclosure. So you're basically just giving the property back to the lender, which is also a good option, but it's not as easy, quite as easy as it sounds. And these are the things to look at for any loss mitigation option. You know, firstly, do you want to keep the house? And that's really worded poorly. It's more like, is it a good business decision to keep the house? Because emotionally, of course you want to keep the house. I mean, it killed me to actually admit that, not to admit so much that I made a bad decision. I was able to, you know, suck it up and realize I made a bad decision. But what was hard for me was to admit that that money I'd put out was never going to come back to me. There was like hoping and hoping and hoping that someday, sometime, it was going to come back. And I really had to realize that it was not going to come back. So firstly, we're looking, is it a primary residence or an investment? Of course, if it's a primary residence, there may be more at stake to wanting to keep it. You know, even if it's not necessarily a great business business decision. You know, you live in the house, you love the house, and even if it's not worth what you paid for it, you know, as long as you can get your mortgage to a place that's affordable, you still might want to keep it. And who's your lender? Not only who's the lender, who's the investor, because your lender almost always is not the one who owns your note. Who owns your note is probably Fannie Mae or Freddie Mac or a hedge fund. Does your lender even do loan mods on investment properties? Is there a refinance option? Can you do a HARP or refinance, and is that going to help? So these are the things to consider. Your financial circumstances. You know, if you're going to keep the property, can you afford to keep throwing good money after bad? Can you afford the repairs, the vacancies, the negative cash flow, and try and wait it out and, you know, hope things get better? So these are the things that I would go over with you when we do an assessment of your portfolio, and just look at, you know, having an extra pair of eyes to look at your business and, you know, help be a little more objective maybe about your business decision. We're looking at also the property and the area. You know, are you upside down? Is it an area that's going to rebound or not? Do you have vacancies? I had one property in around Albany, New York. In fact, two of them there. One was a threeplex and one was a fourplex. And on paper, they looked great. It was supposed to cash flow, both of them, like by $1,000 a month. When I bought these properties, I was stoked. I was thinking, gosh, this is going to cash flow $1,000 a month each. And what ended up happening was that I could never keep it rented. Never. It ended up turning, a good area turned into a bad area very fast. And all of a sudden there were Section 8 clients, tenants, and I could not keep it rented. I could not collect the rents. I had eviction after eviction. And that was, those properties went also. Also, do you have the verifiable financial hardship? Now, I say that in the loosest sense of the word because for the most part, even people who think they don't, we can work it out that you do. And, you know, so don't think that you don't, that you make too much money or that you have too much savings or anything like that. We can 99% of the time work it out that you do have a verifiable financial hardship. I'm very creative. And then you want to look at, like Tanya was talking about, what the effect on your credit score is and your taxes. Personally, I did a credit repair thing, and within 1 year, my credit rebounded almost fully. I mean, it went up to about, you know, almost 700 within a year. And I was able to increase my credit limits and get another credit card and buy a car in a year. And then the tax ramifications, and I'm not a CPA or a tax accountant, you know, so that I don't give tax advice, but what I can tell you is that most people can also work it out. Most good CPAs can work it out to not have there be bad ramifications of doing this. I didn't end up paying a penny on 11 short sales. Okay, so let's talk about a loan modification. Well, firstly, there's best success is on a primary residence. And so if you're looking to lower your rate and your payment on your primary residence, that is a possibility. Like I said, it's very difficult to qualify. It's, of course, based on your financial hardship. There's a financial worksheet that we do. It's based on 31% of your gross income. It has to be where it's sustainable. It's a sustainable loan to the bank. And so let's say, you were paying $2,000 a month on your mortgage, and now your income has gone down. When if you lost your job or something and your income's gone down, and now all of a sudden you're only making $3,000 a month. If they're taking 31% of that, that would basically be $1,000 a month, and that would have to include your taxes and insurance. And so if your payment now is $2,000, and it's going to go down to $1,000, including your taxes and insurance, that may not be a sustainable loan to the bank. It may just be too low for the bank to be able to say that you qualify. They may just say you don't make enough money to qualify for a loan mod. There's lots of lender forms that you have to fill out, and let me tell you, if you're going to do a loan mod, you really need help. It's really labor intensive, difficult. You send in the paperwork and the forms, and any of you that have done this know that you call them and they say they didn't receive it, and you got to send it again, and this wasn't right and that wasn't right, and now they want this and now they want that, and you've sent it 15 times and they can't find it. And so people just pull their hair out doing a loan mod themselves. And I will explain, of course, the entire process to you. And then the good news is the day that they say, okay, fine, we're going to give you a trial mod. Now, a trial mod is 3 months, and almost all loan mods have a 3-month trial mod. And that means that if you make your payment on time for the 3 months, it'll turn into a permanent mod. And I've been able to get some really good loan modifications for clients, but I'm very picky about the ones that I take on because, like I said, they're kind of few and far between. Okay, let's talk about a short sale. You need to be behind on your mortgage payments. And so, we can definitely talk about the strategy. Then the property gets listed when you're about 30 days late on your mortgage payments. What I do is I find a realtor for you in the area, or we can use your property manager if they do sales and if you like them and if they're going to be aggressive enough. Now, the realtor does not have to do any of the short sale stuff, which is what I call the heavy lifting. What I'm going to do is I'm going to get all of your paperwork together. I'm going to coach you on how to do the paperwork so that it's in your best interest. And I got to tell you that, you can, when you do a short sale, you can just use the realtor. I always like to make sure people know that they don't have to hire a specialist, but I cannot tell you the difference between hiring a specialist like myself, and just having the realtor do it, because they're not going to go through that with you. They're not going to look over all of your paperwork and let you know that, oh, I'm looking at this right now, and if you send it in like this, you're going to end up having a cash contribution of about $5,000 to $10,000 at the end. They're not going to do that. I'm going to go over it all with you. So
yeah, may I chime in here just a minute here? I actually just helped a first-time buyer buy a short sale, and I highly encouraged the listing agent. I was the buyer's representative on a property. It was a condo over in Aliso Viejo. It was a great little 2-bedroom, 1 bath, and they just did not know what they were doing. So it took them so long to get this pre-approval that my client almost backed out of the transaction because she thought that it would never get done and that the bank would just simply say, forget it, we're not going to do a short sale, we're just going to foreclose. And plus, she kept on wondering, is it going to get approved? Because it takes time to get approved by the bank. And sometimes there's a first and a second. I connected Linda to the real estate agent because, you know, he was just doing so many things, and she could have absolutely expedited the process because when you're on the end of selling your property, time is money, and it's the reason why you're selling your property. It's because it's bleeding every month. Meaning you're having to pay extra out of your pocket every month because it's just not doing what you think it should be doing. So I highly encourage you to hire her, and the best thing is it doesn't cost you anything unless it's successful. So sorry to chime in there, but I
That's
just closed.
great, Tanya.
I just get in my teeth, and it was just so stressful. So it would have been great if we had a professional in there.
Thank you. Yeah, I mean, I can't tell you how many people did go ahead and work with their realtor or was working with a realtor before they found out about me and then called me and said, yeah, the bank wants them to pay $10,000 at closing, or that the realtor couldn't get it through, it was denied and all of that. And then what I had them do was take a month, you know, unlist the property, and we had to relist the property again a month later and start all over. And I got them, every single one, I closed effectively and efficiently without a cash contribution to these people. And so I can't tell you what a big difference it makes. And so I'm going to send in the short sale package and the HUD, you know, which is the settlement statement showing the lender how much they're going to get. We're going to work on your verifiable financial hardship and your hardship letter. Then what the lender does is they do a BPO, which is their form of an appraisal, and they come up with a value. Whatever the value, and people sometimes say like, oh, well, you know, this property is worth so much less than what I paid for it. They're never going to accept it. It's not, it has nothing to do with how much less it's worth. It only has to do with what it's worth, what the current market value is. Whatever the current market value is, basically the lender is going to take somewhere around that. I can usually get it, you know, a negotiation for maybe 10% under, you know, the current market value, and sometimes even a little less, but that's what it's going to be based on. And so another thing is that I'm going to make sure that the realtor is there when the lender comes to do the lender sends somebody to do their appraisal. I'm going to make sure that the realtor's there and that they're armed with comps and with all of the details about the property as to, you know, anything negative about it, to try and get the price, the value down as low as possible. And then I do the negotiations with the lender or lenders. And if there's two of them, of course, it's more difficult because you have to have them meet in the middle. And what happens is that the first lien pays the second lien as part of the settlement. And that's the negotiation between the lenders, like how much they're going to pay and whether the second lender is going to accept it or not accept it. And that's a whole big deal in itself sometimes for me to negotiate between the two. And it's like regular realtors have no idea how to do that. Then, of course, sometimes the HOAs are behind. You're behind on your HOAs. There's contractors. There's all sorts of things that take negotiations. I do it all. I negotiated recently an IRS lien on the property. So I don't charge more for, you know, any of that. It's I just charge a little bit more if there's, you know, two liens. Then the lender may come back with a counteroffer. That's very normal. And then we go to because sometimes the buyers, lowball it anyway. They don't usually give their highest and best to begin with. And so they're usually willing to come up some, and the lenders are willing to go down some. And so that's part of my negotiation, is getting the buyer and the lender to meet and to get it all workable for you. And all of this I do, meaning that the stress that you have is so much more minimal. And then the good day happens when we get an approval. And like I said, my intention is to have no seller contribution, no promissory note. And I'm able to accomplish that on 99 point something % of my transactions, which I got to tell you, the statistics for short sales closing across the country are 40%. And I close 99.9. Okay, the next area of loss mitigation is a deed in lieu. And like I said, it means that really you're just giving it back to the bank. Generally, the property has to be listed for 90 days with no acceptable offer. That isn't 100% true anymore. If your property is owned by Fannie Mae, sometimes they'll let you start a deed in lieu even before the 90 days. And it says here must have only one loan. That's not even 100% true. I'm doing a deed in lieu for someone right now where I got the second lien to agree to a $6,000 payoff, and the first lien is willing to pay it to them. Even to just take the property back, they're going to pay the second lien $6,000. And so we're moving forward with the deed in lieu. And the investor must be willing to accept a deed in lieu. Of course, same thing, you have to have a verifiable hardship. There's also financial forms and a package, and I will follow up weekly until the good news happens when the attorney package is sent to you saying sign here and we will record this and you will no longer own this property. And that is a very good day. Okay, why hire me? So I already talked some about that. It's really to people's advantage. I'm going to get the job done. I have years of experience, a great track record. I know how to work with the banks. I manage the entire process and keep it moving. I'm detail-oriented. You're not going to have any surprises at closing. I understand exactly what the lenders want. They like working with me. I'm not adversarial. I work with them respectfully on your behalf. And they like working with me. I keep you informed every step of the way. And, I also hold your hand. It's more than just keeping you informed. I keep people calm, and I hold your hand, and I help it so that there's the least amount of stress through this process. I'm going to get you the best possible outcome. I'm service-oriented, tenacious, honest and direct, empathetic, and I love doing this. I will fight for you with your lender. Most realtors hate short sales. I thrive on short sales. I like sitting in my office and talking to lenders all day. And the payment is due at closing. If you don't agree to the terms, you don't owe anything. So I take it totally pretty much on consignment that you don't pay me until closing. And just to let you know, so what my fee is I charge $3,000 flat fee for either a loan modification or a short sale if there's one lien. And if there's two liens, it's $3,500. And the thing, too, is that you're going to stop making your mortgage payments, and you're going to be able to keep the rents. If you have a tenant in there, you're going to keep the rents, And so that's one of the ways that people justify paying me, is that, they just set that money aside and that's it. And of course, it's just that I'm worth it. So here, this is a testimonial. You can just read. This is from one happy person. And another one. And I've completed about 300 short sales at this point, and I don't know, maybe 50 loan modifications. And I'm just really good at it.
Yes, she is.
So let me see what else can I tell you. I'm usually able, with the short sale, I'm usually able to get the tenants some relocation money, or of course, if it's if you're living in the property and you're going to short sale it and move, I'm able to get you some relocation money. And so I'm generally able to get relocation money, even up to $10,000. Most of the time it's $10,000. And so the tenants are pretty happy with that, they get their 30-day notice, 30 or 60-day notice, whatever, and then they get $10,000 to relocate. And that takes a load off of people's shoulders too, because they don't feel good about having to kick out their long-term tenants and stuff. So I know it makes you feel better. Okay, any questions?
Yeah, I mean, people were asking questions throughout the presentation, and I helped answer them along the way, but please, you guys, go ahead and type any additional ones you may have. But I feel it's kind of best that they just write down your phone number right now and or email and give you a call, and or myself a call. It's one of those things where I feel it's important. We do have some questions. Somebody was asking, how long does it take for a short sale to take place from beginning to end?
Well, generally, like I said, we're not going to even list the property until you're about 30 days late. And so it depends on how quickly we get an offer. Generally, you get an offer within a month. And so from the time of the offer to the time of the completion of the short sale, I'm going to say 60 days.
Mm-hmm. And somebody said, how many have you successfully completed? I think you recently answered that. It was over 300.
Yeah, over 300. Yeah.
Your numbers are growing all the time, because remember last year we did this, it was like around 200.
Yeah.
Crazy. Okay. And let me see here. We answered that one already. Do you have any other main questions that you often get, Linda, that you can just share? Maybe they haven't thought about them themselves.
Well, I kind of put those in there, about the tenants, and
yeah, the tenants is really a nice thing. I kind of remember back in the day it was really popular, the whole term cash for keys. That's kind of what the banks were doing. So is that kind of what you were discussing? Yeah. So that's a really nice added bonus that you're able to do and work into it with the relationships you have in place with the lenders.
Yeah. Yeah. Mm-hmm. Yeah, and then, usually I get questions about credit or about taxes, and so I tried to answer those in advance here too. And, you know, it's just, you know, like Tanya said, give me a call, give her a call, and let me look over your portfolio with you if you have any questions, or if you're not sure what to do with it, or which ones. Oh, the other question is, you know, like if sometimes people say if they have, let's say 3 or 4 short sales, you know, if they want to get rid of multiple properties, is it best to do them all at the same time? And generally, yes. You know, it is generally best to do it all at the same time. For one, you're stopping the mortgages all at the same time, so it really looks to the lender that you really can't afford it. You know, that you're not just picking one property out of your 10. You know, that you're really having a hardship, and you're having several of them that you're having a problem with. And secondly, you know, we'll get it all done together roughly at the same time, and then, you know, you'll be able, your credit will be able to rebound again, instead of having to go through it, you know, one after the other, and then, you know, keeping your credit you know, negative for a longer period of time.
Absolutely, and so the reason for that is it takes X amount of years, and it's different between a short sale and a foreclosure and a bankruptcy for lenders to allow you to purchase a home again in the future with conventional lending. So I think it's best if we take all these other questions. There are a couple of personal questions on here. So you guys, John, I'm going to go ahead and forward that to Linda directly instead of sharing it on this webinar. If you could go to the next screen for me, Linda, that'd be fantastic.
Sure. And I'm happy, guys, for you to call me even this evening, you know, or tomorrow is fine, and or to email me, and I'm also very, very communicative and responsive. I work out of my home, and so, you know, I work daytime, nighttime, whatever, weekends, you'll be able to reach me.
Absolutely. Yeah, she has been with us for quite a long time, and we continue to work with Linda because she's just excellent at what she does, very competitive. So this is me. Let's go over your plan of action. Any questions you may have if you're looking to buy additional real estate prior to moving forward with the short sale, loan mod, anything like that, let's go ahead and get the plan together. Please feel free to reach out to me directly. You guys are Marshall Reddick Real Estate members already, so you guys could just call into the office and speak with me, and I will be happy to connect you to Linda in any way. But it's so great to have you guys on here this evening. Such a great turnout, lots of wonderful questions. Glad I was able to answer them along the way. But we're going to have to
appreciate it. Yeah, I certainly appreciate everybody turning out tonight.
Yeah. Well, we'll be talking with you soon, so have a wonderful evening. Bye, everyone.
Bye-bye.